Hello everyone, this is Rob McDougall from Zhang Financial here with your weekly economic update. Today is Monday, November 17th, 2025. In our continuing saga of economic data, we have nothing. Nothing to report from last week, as the government shutdown officially ended at some point last week, Wednesday maybe. So no economic data. We were expecting to get CPI, PPI numbers, retail sales ex-auto. We get none of that. However, there's promise for economic data this week. We'll go over that in just a moment. So of the few economic guideposts or things that we're looking at, obviously the government has not reported third quarter GDP growth. We offer again the fact that the Atlanta Federal Reserve, their expectation is we had a really solid third quarter of GDP growth. Their estimate remains at 4.0. They may revise that up this week. Inflation expectations have been rock solid over the last several months. It's hardly varied. The expectation built in to the 10-year break-even, 10-year Treasury minus inflation protected securities is 2.28. That's the expected average of inflation over the next 10 years. Now, one thing that did change last week, the expectations of a Fed rate cut in December. So the Fed meets again one more time in December. The expectation just a week ago was 63% odds of we'll get another cut. The week before that, even higher. They continue to fade, so the expectation now, probability built into the futures market, is a 43% probability that we will get a rate cut. So the Federal Reserve sort of throwing cold water on the expectation of another rate cut, largely based on the fact that we don't have economic data that we can rely on at this point. And also the concern over inflation. Inflation just is not dropping to levels or as quickly as the Federal Reserve would have hoped. So, markets last week, no economic activity that was reported, and the market would sort of meandered. There was not much one way or the other, give or take. Equity, fixed income here in the United States, S&P 500, almost exactly flat last week, up 12 basis points. The only thing underneath that was the split between growth value, large and small, in a kind of weird, usually small value go in the same direction, not last week. Last week, growth down about 80 basis points, value up 90 basis points. Large up a little bit, 20 basis points. Small got hit though, down 1.2% for a full year on a year-to-date basis. Now the S&P 500 up 15.8%. And growth, which had a large lead over value just months ago, almost even now with value. In fact, values slightly ahead. Value up 13.9% on the year. Growth up 13.2%. International markets continue strong, stronger than the S&P last week. Developed markets ex-US, really strong week, up 1.7%. That index now up 27.7 on a year-to-date basis. And emerging markets, best performer out of the three geographic sectors, was up only 31, it's up, but up 31 basis points last week. Now on a year-to-date basis, emerging markets up 31.4%. Fixed income was down a little bit last week, didn't move a lot, but both the 2-year and the 10-year yield up 4 basis points, pulling the Bloomberg U.S. aggregate bond index down 24 basis points. In terms of economic data for this week, I think we're going to get some. So we'll see on Wednesday, housing starts, building permits expected to be released for October. I'm not sure we even got September, so I'm not going to comment on them. However, Thursday should be the big day. Non-farm payrolls, that is one all investors are really focused on. Labor markets being really the biggest economic issue at this point. So non-farm payrolls are expected to be reported on Thursday, but for September. So we don't have October, obviously. We didn't get September. The month of August was weak. There was only 22,000 jobs added. The consensus expectation for September, which was a long time ago, but that's 50,000 is the expectation. So what follows with that is the unemployment rate. 4.3% was the rate back in August. Expected to be the same for September. Average hourly earnings, same story. Expected to be 0.3%, up 0.3% in September. It was the same thing in August. Also, we have existing home sales coming up for October, so that will be an updated number, slightly up from the last reading. And I don't know if it's August or September, but expected to be up about 4.1 million. Lastly, we'll have the Michigan consumer sentiment, which did not suffer from the government shutdown, so that will come out for the month of November. For the month of October is actually surprisingly better than the month before. Beat expectations, came in at a 53.6. However, the expectation is consumer sentiment continuing to drop. So the consensus expectation for the Michigan Consumer Sentiment Index for November is 50.5. Well, that's it for our weekly economic update. Thank you so much for attending. We look forward to seeing you next week. Thank you.